Welcome to Active Trader Setups Trading Setup Series, part of our Trading and Training Series Chart and Indicator Setups from Active Trader Setups Trading and Charting Package. This video is brought to you by Active Trader Setups Trading Package, a day trader setups company. And be sure to subscribe to our YouTube channel while you're here and go over to daytradersetups.com. You can find out more about our package under our features area, our registration area, as well as our education and training. We have a YouTube channel page that has links to various videos as well. And then you can go over to our members site. It's called tradermembers.com. Go to the products page, and we have a full listing of reference materials for our traders to access, but this page is open to the public. It goes over each of the charts and what they have on them, the indicators, the indications, how to scan for those, and so forth. In this video, we're actually looking at trading setups right off the charts and how the charts and the indicator setups can actually lead you to recognize the trades that are presenting themselves. Sometimes you have a setup that appears to be going to create you a inflection point reversal and doesn't pan out. You just go to the next trade. So every setup doesn't mature, but you'll be amazed at how many do. You'll be looking at a lot of still shots. I make a lot of screenshots during the day when I'm trading, and picking out what we're looking for in these setups that present themselves. Now remember, if you're trying to swing trade, this is a fast-paced chart for this particular symbol. All of this is taking place in part of one day. The same exact chart is being used on CGNX, which is a lower ATR stock. This is the same exact settings. We're running the 25 ATS wick algo is our candle size, and the lines that are drawn here represent days. So if you want to trade this stock on a swing trade type chart, you've got to go to a much larger candle size than the 25 setting. And then you'll end up seeing multiple day lines drawn in your chart, and that's the size chart you'll want to use for a swing trade on this symbol or other symbols with higher ATRs like you see. If you got this many candles being drawn in one day, then you are on a day trading chart. On the other hand, if you want to day trade this symbol with the multiple days here, you go to a smaller setup chart like a 10, and it'll give you not as big of moves as you see on a stock like this. Of course, this is dollars, several dollars. Each of these candles represent about 12 cents as they go down. So that's from 164 to 167. That's a $3 move right there, where you can have $3 moves, but the same setup is what we're trying to look for. So as you can see on this chart, as we're progressing, we were in a big sell-off. You can see that by your cloud. This is the shortest term cloud you can run, and it runs up. And if you'd had this on a 10 chart, you may have day traded this right here because of what the 10 cloud was telling you on the inflections or the daily inflections that we put on the charts, the white lines and the orange line, the actual ATS inflection points. That's what this is an inflection point chart. So here's the daily lines out here, but see, here's all your activity for that day. Now this is 60 or 70 cent downturn. You just get to a smaller chart to day trade that. But for swing trading purposes, this is what you want to see. You're looking for the setup. You've got the breaking up from the bottom here. This white baseline is part of what's forming the right-hand side cloud. This hasn't crossed over yet. It's right in this lower part. It's what this blue line is telling you. Here's the yellow that represents where the cloud is over here. So at this point in time, this cloud is right about here. You see the slope right there tells you what that slope right there is. That's an indication of that. So it gives a little flag pattern that day and holds this baseline, which is starting to form this cloud that's going on right in this area. That's a good place to hold. That's part of the cloud setups. So this could be your first sign that this is trying to move up. But this is really where it starts to get interesting. You're breaking up through the actual line being drawn on this cloud over here. Hasn't twisted yet. It's 2 more days. It's the next day. But it has broken above this line that's being formed. That's your first kind of setup, pulling back to the cloud line, the current cloud line on the right side. This is all resistance. So this can go right here and just sell right back off. It don't have to break out. Your little indicator, your force indicator at the bottom gives you the strength of the day as it's progressing. So when it did break out of the cloud, which this was early on that particular day, it had momentum and continued up. And then your lagging line, which is this white line, normally you don't see it around your candles because it's behind you. It's well above this zigzag pattern here is this zigzag pattern here. So it's above all the candles behind it, so you know you're making new highs. And now we broke through this cloud area, actually right here, the actual physical cloud that you're coming through, and you got a real strong indicator here that lasted for 3 days. Our force indicator went strong on this morning and continued all day. It had a little consolidation here. That's, you get the wicks going on. That's a 60 or 70 cent pullback on this particular kind of candlestick setting. And then the next day it just continued on up. Some of this can be gap. We plot all candles. These white lines have nothing to do with the reason this reversed, because these white lines are being drawn on today's settings. They're plotted back 10 days, so there could have been some lines here at the time, but they weren't white. They could have been some old lines that were orange dotted. But it reversed up here. It just on sheer oversold. Came back down. Could have been running into an old high or something. This chart's not referencing everything. So you get the pullbacks going on. We like to see this. I'm going to show you some other little setups where you get this run up and you pull back right here, then you run again. That didn't happen here. This just kept going strong. Now you can see when it did finally pull back, this is a setup. You've got a bullish cloud that's still, it's out here. It's big and wide. When you've got a cloud, here's a blue line representing right over here. This is what that cloud looked like right here. Here's the yellow. So they're getting close together. It could twist over and go negative, but it's still very wide at this point in time. And so we pull back, and you can see it. It went through the line during this particular day. Not a lot of price range here, but it's holding this line out here to the right. That's this yellow dotted line behind you is representing what's going on. And it's already gotten here. This is turned up. So the fact that the yellow is still rising, that's what's going on over here. That's another little indicator that this is probably not through going up. The flat spot created a strong support area, and it did hold it, closed above it. Next day it ran up a little, pulled back again. The next morning tested this area again, but the cloud is up here. This is the yellow line that's rising over here, still building some strength, and you get another big run for 3 more days. So we spent the time on that smaller ATR stock to just let you see these same patterns that we look at on these larger ATR stocks. That's what you're looking for swing trading. It's all the same learning process. It's just being applied to a lower ATR stock for swing trading purposes, or taking this stock and putting it on bigger candlesticks for the same swing trade purpose. This can more focus in and show you some of the setups that we look for. Here you've got to open the orange line. Remember, the white line is daily inflection points. This is our number one day trading indicator. It plots a white dotted line the day that'll be the first day it's on a chart. The second day it's on a chart, this line goes to the lighter dotted line, and the third day it's on a chart, it goes to a white solid line, and then after that you're going to have about 7 days of orange dotted lines. So each of these are created and they stay on the chart for 10 days going forward. They're called ATS inflection points. So this particular stock opened about where it closed the day before, right at one of the old inflection lines to the penny, plotted on the chart, immediately rejected. Now, is this tradable? Maybe not. It could be a 70-cent spread. I'm just showing you that it is a key inflection point, and you can watch over and over as we go through these charts, and I'm going to try to pick them up. You can see that this sold off pretty hard. This is about 9:40 in the morning, gave a quick little reversal, went right back into our dotted yellow line, which is representing this part of that cloud right out here to the right. So we're coming into the right side, cloud B. We got scanners that put you on this, can tell you that there you can be watching your charts. You don't want to watch too many charts, but you can watch 20 or 30 if you're day trading. You can have that many charts open if you have enough screen space. They can be small, and then you can expand them as you see the areas coming. Also, we got scanners that will scan and tell you when you're reversing on these areas. They'll tell you when you get near the areas. In this case, you've got a negative cloud to your right. The blue is below the yellow, so this blue dotted line here is representing what's going on out here. So this is about where your cloud is, right here when you come up through it. So it's a bearish cloud. You go to the line, it rejects the line, and I can't tell you how close that came, but it was within pennies. It didn't look like it went through it. And in your data box, you can see the exact value of that line. You get this reversal here, and you end up with a $3 sell-off. So there's one of your setups. This is my favorite setup, is the cloud is shifted in the first retracement. Now, this is selling off, and it just keeps selling, keeps selling, keeps selling. Well, what happened? You didn't get a setup. You don't want to chase it, because at any point it could do this reversal. But when you get the reversal, you see the selling off, you broke through the cloud, say, hey, if this comes back up, I'm interested. So as it comes back up, you're watching it. You can actually set a trailing short on a simulated trade on your chart trader, and when it does reverse, it'll say that you went short. You look over at it, say, oh yeah, that's what I was interested in. Went right to the line. And then you step in here, and this actual gave a chance, because I don't know if you can see closely, but there's a little wick out the top of this bar. Sometimes when they first reverse, like right here, there's no wicks. It reversed and continued straight on up. The wick indicates that you had some consolidation there. So even though this bar opened, the low of this bar is where this bar was created. So when this bar opened, it did fluctuate back up. This was the inflection point we had on the chart, 166.97 from the day before. It went up and retested that. It was below it and then failed. And so you had plenty of time to enter this trade in after this bar opened. And then you had this really nice sell-off for about $3 with no wicks all the way down. So you can control this trade and manage it by watching the tops of these bars. And you can set even if you didn't set it to sim trade it and you wanted to take the trade right here, You can create a sim trade in NinjaTrader just by saying short and then creating the trailing bar with our bar chart trader, and it'll continually move the stop down so that you can see what's being plotted as the stop, and you can manage your trade manually with your broker. Next setup, you get down at the bottom here. This is something we scan for. We actually have an instant long setup that runs off of this. Very rarely will you get red to green on this doji bar. It does happen, but most of the time this will be red, this will be green. Now you can go back and look at other reversals. Didn't happen here. It doesn't happen most of the time, but when it does, it's generally pretty strong. Sometimes it only runs a few bars, goes back, consolidates some more. We had a video a few weeks ago on NSC, a railroad that made a reversal, didn't run far. When I say didn't run far, 60 or 70 cents, but it rolls back over and comes down and flags around some more and then gives a huge trade. So they don't always run like this did. And when you can find another reason that it reversed off an old low or something from a few days ago, that's more inclined to give you this kind of run. This is a run from about right here, probably 164.60, takes it up to 166. That's about a $1.30 run into the cloud. Could it have just continued on? Certainly, but it didn't. It's not supposed to. When it gets into these resistance areas, you expect a pullback. It could actually hit this level right here, which represents this cloud, and just totally reject and sell off again. So I like to exit into these levels, and by exiting in versus waiting on a pullback, you'd have made about the same money, but had it pulled back here, you protected 50 or 60 cents of your profits. Now you get this flag pattern inside the cloud. We look for this. Sometimes it goes to the top of the cloud, pulls back a little here, and then goes. This is a good setup to get this little bull flag that was created right on this line inside this cloud. It breaks and runs again for another $1.50. This is a really good pattern. Sometimes you run up here and you watch it come down, and then reverse. And I actually watched one earlier this week on ALXN. I was anticipating the flag pattern. It never happened. It just kept selling off, and the cloud rolled back over. So it doesn't mean it's 100% going to go up, but you're not taking the trade unless it gives the reversal. Now we're going to try to rapid fire through a lot of more charts and talk faster. Now here's another chart that gapped down earlier, and this is about 9:30 right in here. So we had a gap down, got into this cloud area and did all this consolidating, and then sold on off some more. Now what happened when it got down here? Remember, these are your inflection lines. This has been here for 3 days. This is the second day. This is the day before's line. These lines are already here on the chart for 2 days. So this is 2 days ago. This is 3 days ago. Goes right down to the line and reverses. Now you can say, well, here's your cloud. What happens on clouds sometimes, they run back up to this level and reverse off this level and sell off. So you've got an expected retracement going back up to test this cloud level, and you're running into an inflection point. This is an awesome setup. And you get the reversal. You can see we were talking a minute ago about going red to green immediately. That didn't happen. It took few more bars down here, so this wasn't an assertive reversal, but it reversed right where it was supposed to. Now you can take this way up here when it gives a reversal candle, and our scanners are scanning for this. They're also scanning for this on our smaller bar that'll tell you this is going on, and the little smaller bar is giving the reversal, and you can come in much earlier on this kind of trade. Now if you're in this trade, there's other indicators we can show you of watching for momentum. But when you're coming right into here, this is where you might want to exit this trade and capture those gains and not worry about this next 70 cents that took place after this. And this is only at lunchtime when this was taken. It could have kept going. I don't remember. But you want to manage your trade. If you go back and look at the other power momentum, red or yellow and blue bars that will show you the momentum is gaining. If you're coming into here and you've got the lower blue pushing away, then you want to try to stay in it because you expect the momentum to possibly continue. This next chart was on ADP. Now you can see there's a little bit about the size of this cloud back here. This was a huge sell-off that had bounced a little and kept selling off. I actually traded this down here. These are the yellow and blue momentum bands I was mentioning to you that you'll see on some of the charts. I overlaid them on this chart because I use them a lot. But I actually had traded this flag pattern here, expecting this to reverse because it was so oversold. But this is the real trade setup. You know, you'll learn to where you can pick trades up that are outside the box. But this is the trade setup. We're into the cloud. We expect consolidation. If it rips through it, then you didn't get a setup. If it rips up here and pulls back to here, that's a different setup. This is a flag pattern in the cloud. The cloud is resistance. It gets there. It gives you the pullback. It just happened. This was an intraday cloud, not a daily cloud. So this particular line was created earlier in the morning. It goes back in 2-hour increments. So this was the day before. This is around 12:30. So these are run off of 2-hour, 120 minutes. So this line was created between 9:30 and, between 10 and 12 because it's after 12. This was 3 bars back, remember, the solid white line. So it went into the prior day. You see it pull back. It held the inflection point line as well as set up on the flag pattern on the cloud. Great setup. Lots of things. You're also referencing this yellow dotted line, which is your cloud out to your right that's already forming. And the blue dotted line has crossed so the twist out here has already happened. As this pullback, the twist happened right here on the way up. So you're right about here on the right side cloud. That's a bullish twist. You get the flag pattern in the cloud, and you hold an inflection point that is an intraday inflection point, but it carried over from the day before. Great setup. Paid off well. I actually traded this second trade on that particular day on that stock. This is a screenshot of 2 different symbols and actually 2 different charts. I have in my day trading platform, or my workspace, I set up multiple charts that have the intra-cloud and the day cloud tabbed next to each other. And I move back and forth between those two. They have the same cloud plotted on both charts, but one is plotting my daily inflection points, which is my favorite reversal point, and it's the number one with all our traders. Some of them don't even use the cloud. They just use the inflection points. And the other is the cloud that's got the session inflection points. We were just talking about those on the last chart. So this chart has got the daily inflections, but this is more of the flag pattern I'm talking about that can develop inside this cloud, which is resistance. Apple, on the other hand, on this chart, it is sold off. This is about 10 o'clock. It gave the rapid reversal, boom, boom, right here, instant trade, nice run up from there. Now you can see Apple will generally give you some wicks. It's a little more volatile stock because it's so heavily traded by high frequency machines. That's why you get so much volume on it. So you got a wick on this bar, a wick on this bar, a wick on this bar, all the way up. So you don't want to run a current bar stop, or you're not going to stay in a trade. If you're trading Apple, you need 2 bars back, and that's actually what it takes to make a reversal, is 2 bars back. So here you got the reversal bar, 2 bars back, created this bar, and here we go down. So I was watching this with I'm on the daily inflection points. I got a daily inflection point. Here's the day before, 2 days before that. And then all these orange lines go back up to 10 days. So here's an inflection point carrying forward at 198.11 that could have provided a bounce spot, been carried forward for days. Now what's happening right here as this is coming down, this particular chart, I got two different sets of bands. I got my big STS Algo 25 running and creating this band, as well as my smaller wick bars creating the dotted band. So as this pull back, I see this lower band gaining momentum on a much bigger algorithm. So I'm a little hesitant, but I do want to play the bounce if it takes place here at my yellow line, which is my cloud that is actually in a bullish state. This never happened. It just sold off. This was a telltale sign, and the red force down at the bottom that it may not bounce. So I didn't want to take it down here. Just instantly, I wanted to make it put me in the trade. Other hand, same setup right here, flagging inside the cloud, came down, held the yellow dotted line, made the reversal, and you can see that the reversal here on this yellow line, had I waited for the full reversal candle, I'd have been long right up here around 167.50 area. As it turned out, you can see I was in it much lower because I went to my smaller 10 factor wick bar, traded this line, and took this trade early with a tighter stop. I still use the low as my stop. I'll take it on a 10 brick and use the 25 as my stop, and then got this breakout. Now when this got right here, I don't know if it broke through or not. This is resistance. I believe it actually failed it. You can see the smaller blue and yellow band is gaining momentum here. The bottom side's not pushing away yet. Right here, when you had this breakthrough, the smaller band went blue and the lower started pushing away. As long as that lower band is pushing away, it's continuing to widen, and that implies that you got more room to go up. In the first few bars, when you get this double cross, they both went to blue at the same time, the harder the lower one pushes away, the stronger the implied move up is. Now remember, when you're watching our videos, these are for training purposes. They're like a little miniature class. You can pause at any time, note the time at the bottom of your video, and come back and pick up where you left off. This particular chart is MCK. You can see the patterns we're looking at. You got the breakout, the pullback. You got the yellow line of your cloud. It's a bullish cloud. You still haven't crossed over, and you get a bounce there. Now that can either be an entry for a long or it can be an exit for a short. Next day, it breaks down through this cloud. You got the twist right at the end of the day. So this is taking place right here, and you get this big sell-off. A little bit of that could have been a gap down. I'm not sure. Actually, it looks like it's opened about where it closed at. Gave a huge sell-off very quickly, first 15 minutes. Gave a little flag. Nothing in particular about this. This is the trade setup right here. This is covering 3 days now. So this is your third day. It opens up down here very quickly, is 9:31, and 1 minute is up here. Hits this cloud. You've got the twist already right here. The twist has already occurred. This blue line is working its way up right here. So it's appearing to be a long setup. It can pull back all the way down to this yellow dotted line. Could easily happen. And if it had continued to pull back, this line would have continued to go flat this way and made a bigger flat spot. It just flagged at the resistance line and then broke out. So this is a great flag pattern setup. And look at here what we have. Again, we're on our day cloud. We're running daily inflection points on this chart. So you broke out. This was the prior day's inflection point. It opened at it and held it. That's where we created the inflection point from the day before. But when it pulled back right here, this was 2 days before inflection point. This was 3 days before inflection point. So it's back on this day. We created this line that carried forward an exact spot, will continue for 10 days. When it pulled back, not only are we in our cloud setup, we're holding our inflection line. Great setup again. You got everything on your side. All the indications are this wants to continue up, and you get the breakout, and this breakout ends up running over $2. Had one little pretty big wick right here after it broke out, came back, kind of retested this level again of this cloud almost within pennies. Wouldn't have stopped you out on a 2-bar. A 3-bar, a current bar would have stopped you out, but you could easily re-enter by taking a little flag pattern on a smaller chart. This is a strong chart. So you want to find a way back in if you get stopped out. Now, I wanted to look here. As this continued up, you got into all these orange lines. These were going back, remember, 10 days. The first 3 are in white, and all the next 7 are in orange. So they carry forward for 10 days. 133.88 was the high up here, and it pretty much looks like it almost hit it to the penny. As well as over on our standard STS algo clouds, this is a reference. We'll reference the VL and the VLST cloud. A bigger story was going on while all this was going on here. This wick bar we talked about was actually holding a cloud line there when we got that breakout right here. It was holding a bigger picture. It's breaking this yellow line on this bigger cloud. You could actually go over to the VL cloud or VLST and see that whole cloud formation, but this is a quick reference. Takes up less space, a quick glance. You keep this chart very small in size. All you need to do is notice the lines as you're trading a stock, so you can see it provided support there. And as it continued on up, when it got up here, it ran into what was a big cloud out on the right side of one of those 2 charts. 133.94, and this was 88 here. So that's a way to take a different look, as I say. This is a chart of TIF, T-I-F. This is the smaller 10 setup bar. This is a 10 wick bar. It is plotting the daily inflection points. See the daily right there? So these are the same inflection points you're seeing on the other charts. So this dashed line represents the day before. This represents 3 days before, and this represents 2 days before. So as Tiffany worked its way through all of these lines, here's some orange lines going back multiple days. Bounce had all this consolidation in here, very little bitty chart. So this is only moving 10 or 15, 20 cents. Breaks out, pulls back, holds another line. But the main thing I want to show you is when it got up to the big line, yesterday's line, 91.94, this is how you can go over to your smaller chart and pick up the trade early rather than waiting on the 40 or 50 cents it requires to turn the bigger bar back down. You can take that trade very quickly up here at the top, wait on a reversal bar, come in right about here, and have a very tight stop using this smaller bar. You do not want to trail these bars unless you're trading a lower ATR stock, because you're going to get some little movements in them and you'll get stopped out. You want to use the bigger bar or a hard stop and keep advancing it along. But if you're going to run the trail bar, I recommend you doing it on a bigger ATR bar, unless you're trading a small ATR stock, and then you want to trail back a couple of bars for the reversal bar to complete before it stops you out. This is NVDA. These are daily lines, so remember this white line was created at the close of this day. This one carried forward. This was 3 days back. I just want to show you how the cloud is interpreted here. Now remember, the white line wasn't there at the time. The orange line might have been white at the time because it's carrying forward for 10 days. You can see the congestion you get into the cloud gives the pullback to the lower part of that right side cloud, breaks up. That probably wasn't there at the time. Reverses, holds the cloud again, and then breaks for a big run. Same day, it reverses at the top, does a little flag pattern and sells off, breaks right on down through the cloud. That's not a setup. This is. Here you got an early morning bounce. This orange line was definitely there on that chart at that time. It could have been a white solid line, I'm not sure, but it was definitely on the chart at that time. Ran into it, rejected it. It's in a downward base cloud. It's bearish, very bearish. And it's still falling. This is something that when you run into the falling yellow line that haven't flattened out yet, it's a real high probability failure. And it's representing this cloud out here. It's what this yellow line, dotted line, is telling you where this cloud is out here to your right side. Again, you get the little bounces that don't go anywhere. They hit the yellow dotted line, which represents out here. Continue to fail. Here's another one of the setups, breaking through the cloud, pulling back, holding the level. Got the twist over here, already occurred. Here's your blue dotted line above the yellow, and it breaks out and runs. Now you can see out in this photo, this is one of the things reason I included this chart, is you can see the orange lines and so forth. They're going back. This is yesterday, day before, and then continues to plot these orange lines going back up to 10 days. If you're on the day cloud with the daily input, you can see this was 3 days prior when we were selling off. We got a bounce. We ran back up into the 3 day ago inflection point. Also, we're hitting the bottom of the cloud, and the right side cloud has already, here's your blue crossing the yellow, had well happened. This is way down here is what the cloud was. So this is a perfect setup. You're bouncing into the bottom of the cloud. You're hitting the bottom of the right side cloud. You're hitting the inflection point from 3 days ago. You get a reversal on NVDA right here, and this ends up being about a $2 trade even at this point in the day. Remember, if you've traded a lower ATR stock, you got a lot of lines in the chart. These are just the same setups that run for multiple days instead of 2 hours or an hour. This is a Vago, very hard stock to trade. A lot of guys trade it. You can see the setups, how they work. Here's your day before inflection point we've got on the chart. Right into it. Causes a problem. So if you're in this big setup where you've lost the cloud up here, breaking down, already had the twist come in right in here, didn't even flag, just continued to sell off hard. This is from about 11 a.m. in the morning, and this all took place in about 35 minutes. Got to this inflection point. That's a good exit point. Didn't keep selling. It was expected to hold or give some kind of consolidation, or that's a good place to get out. It bounces around, tested again, gives this little bounce back up into the cloud. Now again, it's still falling, the yellow line, just like we talked about a minute ago. This is an inflection point carried forward from multiple days ago. It's orange in color, so we know it was over 3 days ago. We are on the daily cloud with not say daily cloud. We call it a day cloud. It's a multi-day, but it's the day is the session down here on the bottom. ATS inflection points are running not off the sessions, but off the daily bar. So they're here. They're set all day long. They're stationary. They don't move. Went right into that line, rejected for this huge sell-off of about $4, and gets down to the inflection point from 2 days earlier and starts to hold. Another chart on AAP. This is a great day trader. Breaks up 10 o'clock in the morning, doing all this chopping around. Got the twist on the cloud taking place right here, so this is already bullish out here. You get the run up. You don't chase it. You don't know what it's going to do, but if it provides you a setup, that's where you want to take the trade. It pulls back, Goes right down, tests this right side line. It already has this bullish cloud. There's your blue over your yellow. There's your reversal candle. Takes out 3 day ago inflection point and continues on up for a big run. Nice solid, no wicks. When it got up here, it gave a little wick, and look where it held the inflection from 2 days prior as it pulled back right here and then continued to go on up. Remember, when you get this kind of candle on a 25 setting bar, you're talking about a 40 to 60 cent move here from the high down to here before it went back up, but it held our line, our inflection line. Great support right there. These lines are on the charts before the candles get there. This is why this is the trader's top choice, our ATS inflection plots. This is RCL. It is sold off hugely the day before and gave some nice trades. Although it's not a high ATR stock, gave nice trades holding the lines it was supposed to hold. Another pullback here. The white line we discussed earlier in the video as a possible holding point has to do with the right side cloud called the baseline. And then this was the next day though. All this chopping going on. This is 10 o'clock. It goes up, hits the prior day inflection point, 117.04. I actually took this trade. I think it went up to about 30 cents. I actually made this trade, was talking to some guys on a Skype call at the time and called it. That were looking for it to be a short right here if it can't stay above this line. It gave the reversal, gave a really nice trade off here. And then I exited into the 2 day ago inflection point. Capturing the gains, not taking a chance on a bounce here and giving back 50 or 60 cents. This RCL I mentioned the day before that I was trading this. I traded it 3 times actually that day. This was the 3rd trade. I had already traded it off the bottom, did all this consolidation, and when it pulled back here, I did 1 time here and got out. I took the bounce right here, got about an 80 cent move, got out, and then when it pulled back here, it was so strong, I took it again. Right off this line, you can see where my entry was. I didn't even give it time to make me a reversal bar. I used a smaller bar to make my entry because it was holding this white dotted line, which has to do with the right side cloud, and got this breakout. This ran a long way that day. So a really good trader. You only need a few stocks each day to make your day. This is 2 charts of UNH. This is the same multi-day cloud chart we've been watching. Here, you got this strong run for about 20 minutes here. Good strong reversal, but it gets into the cloud and you see how you get this pullback. I teach about the flag pattern and this pullback here. What I mainly want to show you is another thing, taking that different look I'm telling you about. The cloud to the left is a VLST. That's a very longer look back than the VL. A lot more bars involved in creating this cloud. When this little bounce took place here, is it going to break out or not? By taking a different look at other, it's just like looking at a 5-minute chart and a 60-minute chart. Here's the run up. We've got our trend shift pivot zone, which we teach in the older videos about projection charting. It's in this big sell-off. When it's running up here, it just turned green. Many times you get this retracement back, and this is the exact reason we developed the clouds, is when we got these breakouts. Why am I not going any further? Show me a reason to doubt the acceleration, and that's when I came up with the clouds. I'd used them years before. We brought them in, customized them to our algos, and this is plotted off our 25 algo chart here, the one to the left. And it's a bigger, longer-term trend. It's running a VLST cloud, which incorporates more bars. When it got right here, this pink line represented this big, giant, flat spot back here on this cloud. Its resistance, and you can see that it did resist on the shorter term. And This is like time frame continuity. This resistance area tied in with this over here. Here's another example of the same type thing. This time it's on the 25 algo, not our wick bar. 25 algo is what's creating these resistance lines. The wick bar is what we're trading off the lines. You can see it ran right into this cloud, and that coincided with what was going on here and then again here. This is also a kind of a negative cloud anyway that is trying to get through, and it hits this big resistance on a bigger time frame chart, bigger trend chart. It can't get through it, tries it twice, gives us sell-off, and then you can see our yellow and blue band on this chart as well. As it started down, this went yellow to blue, implying stronger momentum to the downside, and then as it continued and got through this flat spot, it gained momentum, got really strong on our edge alert, and started pushing away at the top. The harder the push away at the top, the bigger the push to the downside. And you can see what a big sell-off this ended up being altogether, and this is not even the end of the day. This is pH again on our daily cloud or our daily inflection point chart. I just want you to see the flag pattern. That's all it is. It runs up, gets in the congestion consolidation area. Here's your yellow crossing the blue over here at the same time of this pullback, breaks back out, gets through the cloud, and gives you that flag pattern breakout. We have scanners that look for this. Personal favorite here, AGN, gives that breakout through the cloud. Now this is a intra-session lines here, so this was only plotted between 9:30 and 10. This line was placed here, and then any other lines would go back into prior days at this early point in the day. But here's your breakout through the cloud, pulling back to the physical cloud, as well as this right side cloud at the same time. Here's your blue dotted line right here crossing the yellow. So here's the blue. That's what the cloud looks like right out here at that time. So we've got a little bullish twist going on. We've got the pullback right into the current cloud, and the right side cloud simultaneously reverses off of that, and you've got a very nice $2 move. And look at these candles here. Got one little wick right there. Solid run, easy to manage and stay in this trade. Same pattern reversed here on Adobe. The breakdown, the go back, revisit the cloud line and fail. Another similar setup. Sell off into the cloud area. You got this big cloud over here. Now, could this just bounce slightly and roll over? Certainly. You see, once it came up through here, it made it to this white line and came back and retested this yellow line, but it didn't test it. It probably tested it first before it made that wick. It didn't test it quite enough to make a reversal bar. It was like almost did. This was really close to flipping over, but it did not. So it held, didn't make our reversal bar. It did hold this line very well. So even if you were watching this here and then you get this pullback, you step in on a smaller candle like we showed earlier. You also got intra-session, so this goes back at least 3 2-hour bars. This is 10:30 in the morning, so this line carried over to the day before, as well as this orange line that it held as well. Flexion point charting again. Quick glance at a UNH chart. Again, this is the daily inflections. Running the daily inflections, you got the sell-off. Early in the morning, it couldn't get back through these orange lines, consolidating, got the big sell-off near this orange line that's been there for several days, gives a big run up, fails up here, breaks through the cloud. This was a highly probable reversal point. It didn't reverse, so by using our reversal bars, you don't take the trade. If you wait on the bar to tell you, it continued on up, got back up here where it consolidated earlier. Back to our inflection that had been there for days again. Orange line, multiple days, has been on the chart. Reverses, gives this huge sell-off. and it goes all the way back down to 2 days ago. Plot holds it near to the penny, gives a massive reversal off of here. Strong. This could be an auto trade on our instant long because of shifting from red to green in one bar. Strong reversal. No wicks on the bottom. Boom, 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 boom. I waited until it created the bar to get in this trade, and I would have adjusted this down to right here unless I had my yellow and blue bands showing me stronger momentum. That's why I'll just leave my automatic exit bar up there, and as I watch the trade develop, I decide if I want to exit here or if I want to try to continue based on what the yellow and blue bands are showing me. Another shot on this UNH of what was going on. Okay, you see this coming off the 2-day prior daily inflection. This is a intra-session inflection. Remember, these are set, they go back multiple days. So the white bars would be the most recent, could be some of today's, but the orange bars are going into the prior day. And again, you see that same, why that was created there. These were there from the day before. Again, another pullback, the breakout, the pullback to the cloud, held the right side. Now I waited on the full reversal bar here because it had so much consolidation there. You can see why this is my favorite trade setup. I'm back in this again as this ran up into, this is intraday inflection, as it ran up into these from the day before, because this is early in the morning, so all these orange lines are from the day before, as well as some of the white ones actually. As it ran up through here, I'm trailing up, and I got tighter. I was a single bar trail all the way up on this, not a single wick. So by trailing a 1 bar current bar trail, you never get stopped out. You manage this trade with our bar chart trader. Here it is at the inflection point. There's some more up here, so I've got to exit a little higher if it pushes through, but I've tightened up. I can manually move my stop on bar chart trader, and it won't reshift itself back down until another bar progresses it up, and it'll resume what it was doing. So I was tightening this up in case it reversed here now that I've gotten this far to protect those profits. This is just a screenshot of the alerts log when you're running the inflection reversals. Now these just run off the daily. They don't run off the intra-session. And you can select, I want to look at number 1, number 2, number 3. The white lines, I don't care about looking at the orange lines. Or maybe I'll go back to 4 and 5, which is the first 2 orange lines. Let me go back 5 days. Other than that, I'm not interested. You don't have to look at all of them. They're individual alerts. They're created. They give you the time of the alert and the price that took place. Of course, you don't want to take a trade at 347, but just to show you how they work, they're constantly coming out off your trade, off your list. You put the symbols in the list. You trade your watch list. Got about 5 more charts here. This is Apple, big sell-off day. This is a gap down. See, it says 930 right here, so all this is gap down. We plot all the candles so we get our proprietary clouds to be in sync with where they need to be. It needs to know about all the price movement. So here's your reversal of Apple. The trade is to pull back into this line. It pulls back into the cloud slightly below the current cloud that's already twisted bullish, and take the trade down here real low. I don't even wait on the reversal, because on the reversal candle on the bigger bar, I take it off the littler bar because that's how much confidence I have in this setup. And then I'm going to exit up here into this line because I know how much high frequency traders like to trade this stuff. You can also see that where my stop is running a current bar trail. I programmed those in at 6 cents below the low. Is where I found to be an optimal spot. A lot of times I'll be within 1 cent of getting stopped out and not. Now those can be programmed by you as tight as you want them. So chart of RL in the morning, opened around the prior day's close. There's our inflection bringing forward for that day. This is 3 days ago. 2 days ago, You can see the quick run up at 9:40 in the morning fails the 3-day ago inflection point. We are on the daily inflections. All levels on the chart at market opens. They stay there. They don't move. So you see this great sell-off takes place. You're below the cloud that's already negative. It reverses off of 2 inflection points that we put on the chart for you ahead of time. Been there for 2 days actually on both these lines. You get this monster sell-off from around 114 all the way down to around 111. So that's a $3 move. And when it gets down here, it gives the assertive reversal from our red force alert right back to our green force alert in the 1 bar period after the doji on our reversal bar. And it comes into a multi-days. Again, this is daily inflection points. So the orange lines are going back more than 3 days on the chart for 3 days or more already. Comes right to that line, does penetrate it. Just because something takes out a line doesn't mean the line's still not support. Gives that massive instant long reversal. If you loaded this chart symbol into our instant long, it'll take you long, or it will sim trade it long for you, and you'll know when it took place. You can also say, I want to do a long trail. Watch it. It'll put the price right on the chart that it takes to create this next green bar, and then you can go manually trade that through your broker. You got a monster bounce here. Went right back into existing day before inflection point and started consolidating, as well as the cloud. All the stuff you're seeing is pre-put on the charts. This is all about creating a trading plan that you understand the system, you understand what you're looking for, and you trade your own symbols. We got one chart after this one. This is a PXD, huge run up. This is all gap, 930. This is a gap up into here. 932, it's up here. Hits a 3-day ago inflection point, rejects it almost to the penny. So there's your sell-off to keep you from jumping in a trade. Oh man, this thing's running. No, it's not. It's gapping. And you got the quick reversal off. If you like to sell the gaps, this is a quick reversal. Gives you a great reference point to trade that kind of trade setup. And you may know this is gapping pre-market. So you've got it loaded looking for your inflections. You're already going to the chart. You can find this line pre-market because it's been there 3 days. It's on yesterday's chart. Yesterday's chart, it was a little dash line, not this dash, the other dash. And then it turned to a solid white on this day. You can pre-market, look at the values, and go decide, hey, if this rejects here, I want to be short. Just another setup, big sell-off on a chart, back into the inflection point from the day before, reversed right off the level, consolidated at the cloud, and kept going. The levels are what this is all about. You know, they just released a study a few days ago, JP Morgan, I believe, that 80% of the trading is done by computers. Of course, about 60% of that is balancing out ETFs and so forth. The other 20% is run by these quant funds. They got these computers programmed. You need to think like a computer, and this helps you do so. ATS inflection point charts and our clouds, and you've watched over and over these yellow lines and how the cloud can help you. But if you don't want to use the cloud, don't use it. You can take it off the charts. You can use just the inflection points. You can also use standardized candles along beside ours or in place of ours. You can replace these candles with a 5-minute candle or a 3-minute or a 2-minute, whatever you want to trade. Thanks for watching this video. I know it's been lengthy. I hope you learned a lot. Continue to watch our videos and look forward to having you as a client in the near future. Again, this is the Trading and Training series where we look at our chart and indicator setups, active trader setups, trading package, a day trader setups company, home of the ATS bar chart trader, ATS inflection points. We also have futures, VPOC scanners, and VPOC charts. Thanks for watching our video. Plan to watch these videos on a regular basis and subscribe to our channel while you're here, and you'll be notified every time we put out a new video. Thanks again.